Good morning, all. Hope you guys are all doing well. I know the market has not been doing much since 11th of this month, I believe. Yeah, since the 11th. So, nearly 2 weeks, market has not been doing anything, in fact. So, I thought, why not make a small little video? So, last couple of months, I've been chatting with fellow traders, and what I've understood is that most of us are finding it, or rather, most of us know most of the strategies that are available on YouTube or that we have read somewhere. But we find it very difficult to have a bias, to start the day with a bias, right? To know whether we should look for trades on the long side or short side. So I thought, why not make a small little video where I show you guys how I try to build my bias for that particular day. All right, let's begin. So as you guys know that for me, previous day's range is pretty important. So let me just mark the previous day's range here. This is 23rd high. Let me just mark it as high. Previous day high. This is 23rd low. Let me mark this as low. Alright. So this is how I used to mark my range. Okay, this is previous day high. This is previous day low. Okay. So this is how I used to mark my range. And if you go on a 5-minute chart, okay, you can see market opened and kept crashing down from there. Alright, so now I'll show you there are a few other things that I do to build a bias. Okay, I generally have a bias for an entire week, and the previous day's range guides me along with my weekly bias. Okay, so let's do this. We go on a weekly time frame now. So every candle is a weekly candle, as you can see here. So let me just mark the previous week's high. Previous week high. This is previous week low. Okay, come back to the 5-minute chart. So the red line that you see over here, this red line is the high of the previous week. Okay, the green candle that you see over here is the low of the previous week. Okay, previous week is from the 14th till the 18th. As you can see, 14th till the 18th. Now, once this is drawn, what I do is that I go to the candle that made the high on the previous week. As you can see over here, this is the candle. 16th is the day when we had the high for the previous week. So what I do is that I mark the high. Sorry, I mark the high, and this is the low for this particular day. Okay, I mark the low. Now once this is done, what I look for now is, see, I'm doing this at the end of previous week. Okay, so after Friday, Saturday or Sunday, this is what I'm doing. Okay, so once these two lines have been marked, the high candle of the 16th and the low candle of the 16th, between these two candles, I look for a candle that has made the highest volume. So this particular candle on 12:45 is the candle that I believe has made the highest volume. Look over here, 12:45 candle has got 3.84 million volume, and the next one is a 3.66. So you can easily see this particular candle. If I, let's say, the horizontal line and I mark this, you can see this candle has the highest volume between the low and the high. So once I do that, I mark this candle, 1245 candle, and I create a zone here. Okay, so I'll just delete these two lines that have gone. Likewise, I go to the low. The low was made on the 18th. So I do the same thing, mark the low of the 18th and mark the high of the 18th. Okay, once that is done, I look for a candle between the high and low of the 18th. I look for a candle which has the maximum volume. You can see the 925 candle. Look over here, the volume range. It shows 10.6 million. The next one is 10.36 million. So the 925 candle with 10.6 million volume is where I would mark and create a zone on that candle. Okay. So this is how I create my zones, two of them, in between previous week's range. Okay, so let me tell you how I build my hypothesis. Okay, now this range is from the 14th till the 18th, previous week, high low mark, and the day that made the high, I mark the most important candle. The day that made the low, I mark the most important candle. So I've got two zones here between these two ranges of high and low. Okay, previous week high, previous week low. Now, if the next week market opens below this low, then my hypothesis is that I see the market going down 9 out of 10 times. Okay, this is how I build my hypothesis. If the market opens above previous week high somewhere here, let's say on the 21st the market opened here, then I will look for long trades because I am seeing the market very bullish and I expect the market to continue going higher 9 out of 10 times. So I'm very bullish over here and I'm very bearish below the low if the market opens here. Okay. Now let's see, as you can see on 21st, market opened between the previous week low and previous week high. The market opened here, as you can see, at 25,037.2. Okay, market opened here. Here also, I'll still have a negative bias. Not a very strong negative bias, as if the market would have opened below previous week low, but still a negative bias. The reason being that you can see we created these two zones. Okay, for me, this is the support and this is the resistance zone within this weekly range. Okay, you get that? This is the support because it is the zone that is created lower. This is the resistance because this is the zone that is created higher. Okay, so the lower zone is always a support zone, the higher zone is always a resistance zone. Now price opens above previous week low, price is opened here, but it is below the support zone. So I am still having a negative bias. Not a very strong one, but still a negative bias. Okay, and I would look for trades which are going to help me take a short position. And if I find one somewhere over here, then my first target would be previous week low. Okay, and from here I would expect the market to jump up again. Okay, and if the market does jump up again and we see a buy signal somewhere here, you see the buy signals or the sell signals, you can use your theories or your strategies how to find signals. I'm not going to teach you guys that. Okay, but if price hits previous week low and you see it bouncing back up and you see a buy signal here, then my first target is going to be this zone. Okay, and once price hits this zone, I'll again short the market. Why? Because remember, price is still below the zone. It opened below the zone and it's still over here below the zone. It hasn't gone up. So if price whenever comes and touches the zone, I am going to short the market from it. Okay? Short the market with where's my stop loss going to be? Above the zone. That's where. Now I'm going to look left and I'm going to see areas from where I can keep my stop loss and I will mark that. Okay? So you can see here. Oh, where did we go wrong? Sorry for this, guys. Just give me a minute. Okay. So we shorted, price came up, and it closed above the zone. Okay. When this happens, the price opened below the zone, came, took support, and then at the end of the day closed above the zone. Then for my next day, my bias is going to be positive. As in, I'm going to look for long positions. Go long. Okay. And when I will go long, if price opens between these two zones, which it has on the 22nd, I would wait for price to come into the zone and I would wait for positions being built up for long and I would try to take a long position. Okay. See, this day one can argue nothing much happened, but at the same time you didn't go on any loss. Even if there was a even if there was a loss, it was very small. Okay. But see the next day, what happened? Price opens between these two zones, comes down, hits my support zone. You look for buy positions here, carry, and you short here. Square off your positions and you look for short positions here. Okay, this was the end of the day at around 2:30, so I would not even suggest you guys should get into a trade, a new trade, a fresh trade after 2:30. But imagine you made good money. This was around what 25,080 levels to 25,200 levels. So you get decent, 100, points. See today is a very good day. Price opens here above our resistance zone. Price opens here, but yet below previous week's high. The red line is previous week's high. So it's opened between previous week high and our resistance zone. And it immediately came crashing down. Okay. So once this happens, you are always looking for short. You are not going to look for long. You will look for long only if you see price, something like this comes down, then from here goes up, crosses the previous week high, comes down and close up above this. That is when you will look for a long position. Okay, when you see price making a high, coming down, and then breaking this high over here, this level over here. Once you see price breaking this high over here, is when you would go long. Until then, if price is somewhere around this level here or here, you are looking for a short trade and see what price is done. Now, I'll tell you how I had taken shorts in these. There is my trade here. Today, for some reason, my computer is really slow, so please excuse me. Okay, so here now the ranges where I had taken short positions here. Here, here, here. These are all my positions for going short. Here, here. Okay, so these are all my positions to go short for today. And the entire day you have not, the market has not given you an opportunity to go long. So I've shorted these levels and these levels and I took profit here because I was expecting the market to take a jump from our support zone, which has not happened yet. Correct? So now you can see the market has made a higher high here Okay, so maybe one can look for maybe a support from these levels. If I'm not taking any trade, I'm done for the day. Okay, ideally, I would expect the market to go up, come down, and make a high. Somewhere in this zone, I would take a long position. Taking a long position over here would be very risky because the market is below a support zone. Alright, so this is how I would create a bias. Okay, same thing you can do on a monthly basis. You mark the high of the month. Each candle is a monthly candle. So you mark the high of the month, mark that as the previous month high and previous month low. Okay, so these are our monthly levels. As you can see, this is the monthly high, sorry, monthly high, this is the monthly low. Okay, so now same thing, go to 5 minute chart, go to the candle that made the monthly high, look for it, you find it. This is the candle, I think so. Yeah, 30th of June. That was when the monthly high was made. So what you do, same thing, you mark the high of the day and you mark the low of the day. Okay. Now between these two, you look for a candle that has the highest volume. So we have marked the high. The high of the day was the 925 candle. You see the 930 candle, the 920 candle, sorry. That is the candle that has the highest volume between the high and low of 30th. So you just mark that candle, the 920 candle, give it a different color, a blue. You want, you can lighten up the blue a little bit. Okay, there you go. So what we are trying to do is that we're trying to mark the monthly range and the monthly support and resistance zone. Okay, so these are going to be strong levels. Get it? And price will for sure react to these levels. So anytime you see the price coming and hitting these levels, rest assured you can see price reacting from there. And as a trader, that's exactly what you want. So I mark the high and low of the 13th of June, which is the low of the month, low of previous month. Now between the high and low, I got to look for a candle that has the highest volume. In this case, it is the 920 candle. So I mark that. So this is my support zone for the month, where wherein if I see price anytime coming towards this, I'll expect price to jump from these levels, these two levels. Okay, so this is the low of June. This is the support zone that I've created. So when you look at the larger scheme of things, we have created the range as in the high and low for June. This is the high, this is the low. So mark here previous month low, previous month high. We have created these zones as in the resistance zone for June and the support zone for June. All right, and you can see how beautifully price has reacted to these zones. If you see here, let's see, this is 30th. This is the day this was created, the last day of the month. You mark these levels and see what price is done. As soon as it hits this zone, you, you find rejection. Goes up, again find rejection. Price has not been able to go back to this zone. Okay, and over here, this is our weekly zone, previous weeks. high and low, resistance zone, support zone for the previous week, and how prices are reacting to these zones. Okay, so I hope you guys have got an idea what I'm trying to say over here. So building an hypothesis and having a bias is important. You cannot go into a trade and have a bias according to what SGX did last night or what Dow did last night. If you are going into the market with that frame of mind, you are going to bust your account. You're going to be slaughtered. Okay. So see, trading is a game of probability. Okay. But when we say probability, you have to make sure that you are on the right side of the ball. You're not taking any blind trade. We are trying to take an educated guess over it, right? So all of us have our hard-earned money put into this, okay, and it really pisses me off when I see traders putting in their savings and trying to take trades without having a clue where the market is going to go. Okay, so see why I choose high lows in any time frame is that there's a reason why a stock or an index or any counter goes to a high on a particular day or week or month or quarter or weekly or monthly, sorry. Likewise, low. Why does it create a low? On a particular day, week, month, quarter, yearly. These are not random positions. Okay, the highs and lows are not made by people like you and me, the retailers. The highs and lows are basically made by the big guys, the big sharks. Okay, so so we have to respect those zones. So there is a if a particular low, let's say a low has been created on a weekly basis. Okay, there's a good chance if price reaches that low, there's a good chance that you might see a bounce from there. If price goes to, let's say, a weekly high, is touching the weekly high, there's a good probability, okay, that price might fall from there. Likewise, daily high low, likewise, monthly high low, quarterly high low, yearly high low, okay. So when you have these things marked in your chart, or if not marked, if you can remember these levels on your chart, and you wait for price to come there, that's when you increase your probability of winning. Okay, see, making profit on a daily basis, looking at YouTube channels and seeing those guys making those lakhs and lakhs on a daily basis, it's all very good. Okay, but remember one thing: as a trader, your priority, number one priority, is to protect your capital. If you manage to do that, trust me, you will end up green at the end of the month or at the end of the week if you learn to protect your capital. If you're going to take trades anywhere and everywhere, then that's a recipe to blow up your account within hours, if not days. So that's why it's very, very important to build a hypothesis, to build a bias. Okay, so just go through this recording again. I know it's become a long video, but I thought maybe I'll take time and try to explain what I do and from where I try to get into a trade, be it for long or short. Okay, so if you guys have any doubts, as always, you can get in touch with me, and we can just have a discussion and then try to learn off each other. All right. So you guys have a wonderful weekend that's coming up, and with the way the market is going, I would suggest to stay out of indices and uh, try to be stock specific. There's lots of money there to be made in stocks. Uh, Indices as of now it's doing nothing. I mean I'm sure most of Most of you guys have lost money the last week or two. So stay out of stock. You can use the same logic. Stay out of indices. You can use the same logic with stocks. The way I've marked the levels, you can use the same logics. Go through it. Just go through. Just take a couple of stocks, 4 or 5 stocks from Nifty 50 this weekend, and draw these levels that I've taught you. The ranges and the support and the resistance zones for those ranges, and you see how price reacts to those ranges, reacts to those zones, and let me know what you guys think about it. Okay, so again, have a wonderful weekend, and we will get talking soon. Cheers.